Priceline 60-minute chart in the Market Maker platform. Today's date, 2/2 of 2013, time 11:59 a.m. Pacific Standard Time. We had a great big move to $720 where the short got into play. We had a huge left elbow gap down to that teeny line right to the penny. And what is the teeny line movement? $3.41 on the daily 1/4 delta on a 60-minute chart. 1/4 delta in our system. Each line value is $3.41. We can clearly see how accurate our platform is. It's mathematically coded and it has high frequency. So when those robots are ascending, they're winding Priceline up. And that was a 60-minute breakout that we had a $39 move that we featured last week in our stock alert. And then we had the big nice correction all the way back down here to the teeny line where that $39 breakout on a 60-minute happened, and we came right back down in the full distance. And then we had some gap ups here where the gap downs were mathematically, and then we sold right on back down here, and that 60-minute diamond, which is 60-minute price bar, is right there on that support level. What we are going to take a look at by using Priceline, we love to trade the option pit that we own, and we do. And we're taking a look. Here is the Priceline. It had a $13.35 range. It had the high of $6.98 and the low of $6.84. What that means as of current on the 60-minute chart, it's very clear that those trading ranges represent those sell gaps that we give alerts on all the time, right below the 700 handle. And that the $700 put options are transactable and they pay big money. And so basically what we're looking at this very moment is the 690 weekly put, which would expire 1 week from today. Well, it wouldn't be 1 week, it'll be next Friday. So Saturday to next Friday. We start trading on Monday. This is the range. By looking at and using the 60-minute chart, buying the contract as a 690 put hit 860, and it had a $5 move. Almost. Well, it did. Close enough. So $4 and some change. You got 4.70 range. They closed at 1520. They marked them down to 860. 1330 was a high, knowing that we make markets at wholesale bids in the Market Maker pit. We own our own options exchange. We highly recommend that you get to the SMF options exchange on the home page, and you can take a 1-day exclusive trial when you're watching us get the live entries. You've got all the live trading videos with profits right here for you to go over and enjoy. And that you can join, and we can give you up to 15-1 for equities. Intraday will give you the trading capital. You'll get a monthly expiration, most importantly though, in this monthly program, and you'll have buying powers. You get 3 weekly options expirations to make trades with our alerts and our setups. What you need to do now is understand that open a new account tab is here. Feel free to click on it. You can see, read the document carefully. Another thing that we would like to tell you under trading is open an account tab. Here you're going to get all the benefits. We will give you money to trade with the market maker. That is the one who gets the wholesale price entries, exits, and stop management orders. You will not be confronted with the pattern day trading rule any longer with accounts below 25,000. You'll be able to make as many intraday trades as you wish. Well, right now, the people under this stupid rule handicaps the individual small trader because of their account balances, and their trading platforms are retail. They're not direct to the market. An order execution system is everything. Take time to read the page. We are going to be looking at Priceline's price volatility by trading the 690 put. I'm also going to show the $700 put. that had a low of $13.10 and a high of $19.70 with a 21.50 close. I'm going to put this put option in here on the weekly. It says weekly now. The highs were up here. Here are some of the price ranges on the body of these put contracts. They got great ranges. They're deflated down here. When Priceline goes up, we'll be issuing alerts with the following: that every gap up, left elbow gap down to buy it, to buy calls, of course, and that's price volatility in both directions mathematically. We have a market maker platform. It's not a day trading platform. The market makers issue their orders from here, and basically every gap towards 695 is going to be where we will be looking at the $700 put in the money. Once again, that's the $700 put in the money, along with the 695 put that had the bottom ranges, and that when we go in to taking a look at it, that this is a deflated price based on Priceline's directional price movement that I showed. And these are a weekly contract that I showed. Here is a 690 put that's down here that I've already showed. These are the ranges here in the 690 put. They have a $4.70 range at wholesale prices based on Priceline hidden resistance. On the 60-minute chart, mathematical reversals, each line is 341. It came down 1 quarter delta twice, 3 times a quarter delta, 3 times 341, mathematically right to the diamond. And that diamond is a high-frequency algorithmic robot that tracks the ECN, high-frequency trading technology software, in the broader markets, in the bid and ask ranges, and any name for that matter, but this is on Priceline. Okay? So that's what 1 quarter delta value is in the system on a 60-minute chart. Support levels will be support levels down here at the 60-minute half bar on 131. That's $692 right here. Here it is in the info panel. 682.96. Correct me. 682.96 is that half bar support level. So therefore, any gap to these diamond resistance levels is where we finally will make our transactions, looking at the 690, the 695 put setup that had a great range from closing at 1974 on Thursday. Friday, the high was 1450, the low was 1080. This is what it looks like. Here is that chart again. That's down here at 1080. That's deflated value based on resistance levels in the name, and then rolling over in the price volatility. And calls go up too at certain times. Really great. But right now, we're looking at how the put side is paying in the marketplace. When you get out at 1080 and you're selling, you can see the last bids. That's a $5 move. The last print was 1440, but the bid was 1550 by 1660. I'm concluding the Priceline trade for the following week alert. I'm concluding that the 60-minute market maker platform, which is not a regular platform or a regular chart, no, it's not. It's mathematical price directional movements. When the diamonds go up, you have calls. When the diamonds go down, you have puts. When you gap down and you get support, you buy the lower end of this left elbow. You come up off of the bottom, diamonds are ascending, you stay in the calls, they gap up, you sell, you buy the other side of the put side for the reversal. I'm concluding Priceline. I'm concluding the 3 strike prices on Priceline that we'll be looking at for next week. Starting Monday will be 690, 695, and the 700 based on those 60-minute reversals. Let it be concluded for intraday market making in the option pit on Priceline volatility. Why do we trade the options here all the time and update it all the time? When you have $13.35 movements intraday, You get better premiums and you get bigger intraday gains at wholesale and retail exits. Join the SMF Market Maker Exchange Pit. The market makers will dispatch the orders. You will be given trading capital. Please sign up to find out more, read more, join the 1 day trial, take advantage of what we do. The market makers issue the orders. You use the monies that we give you to trade with, the extra buying power that you get. No more pattern day trading rule. Small people, big people, institutional people, doesn't matter what level you're on. You're all welcome.